What's up and Happy New Year? Can you believe 2022 is here? If you're like me, I've been waiting for 2022 since January of 2021. So hopefully you are going into a year of momentum. You're positive, you're ready to go. Now, look at the title here. It says Keys to Real Estate Success in 2022. So you're going to have to address two sides of this coin. The first one, which I always like to address first, is the psychological. What does this mean? If you want to buy a home, you got to ask yourself this question. Do I really want to buy a home? How committed am I to this? Do I want it more than my dog, my spouse, my mom, my dad, my UPS driver? How bad do I want it? Do I want it as bad as needing to breathe? Because that's what it's going to take. The other piece is you're going to have to be very patient. And the third piece, psychologically, you're going to have to be very persistent and resilient. Here's the truth. You're going to have to put multiple offers in. It's a very competitive market. That's not going away. Look, the demand has outpaced supply forever. We've been talking about this ad nauseum, and that's still the case in 2022. There's still not enough housing. So you're going to go up against other people who are going to put offers. But my question to you is, are you going to crumble because your first two or three offers weren't accepted? No. Make sure you have the right team and you're going to be successful. Keep going. Just like anything in life, think about all the things that you've accomplished. Was it easy? Probably not, right? There's always going to be a little bit of hustle required, and there's always going to be some challenges in life. So let's get through that and let's just accept it and move forward. The second part is kind of like a little bit more of a boring part, but know your numbers, right? Let's break this out real quick. We've all been watching the news, and we know that ADP came out with the jobs figures, and that was 807,000 new private sector jobs were created. We also know that 4.5 million people just decided quit their jobs. So now all of a sudden, entrepreneurship is real. Everybody's starting side hustles, starting new businesses, and that's going to continue, I think, because I think socially we've changed because of this pandemic. Let's be honest. A lot of things have changed, and some of these things are not going to go back to the way they were. One of the things is people being tired of going to these jobs that they just didn't like anyway. 4.5 million people did the great resignation, and that's going to continue, I think, that type of pattern. Okay, the next piece is the Bureau of Labor Statistics came out with a number of 199,000 jobs created, which was about half of what they expected. Now, why are the numbers so different from ADP? Different factors went into these different reports. But if you do a blended, we're at about a 7.3% unemployment, if you look at it in real terms. The other piece is the big elephant in the room, right? Interest rates. We've been watching the rates have been going up. Now, why is that, right? Here's the truth. The enemy of interest rates is what? Inflation. Inflation has been going up. We've been talking about supply chain issues, right? Gas is super high. Everything, your milk, I'm sure you've noticed, going to the supermarket has gotten a lot more expensive. So in order to keep inflation in check, rates have to go up. Why? Because everything's more expensive. It's costing more, right? The cost of goods is a lot higher. So rates have to go up. For those of you who are of a certain age, remember in the 80s when Paul Volcker was the chairman of the Fed, he had to raise rates. Rates went up to 18. In 1981, it went up to 21% for a mortgage. Once inflation was then checked, rates went back down to a whopping 12 to 13%. And everybody thought that that was a great deal. And I say this because now, we cry about, 3.5% rate. The reality is that rates are still fantastic. Pre-pandemic, we were in the fours. Don't forget that. So rates are still great. So our chairman of the Fed today, Chairman Powell, reality is he has to raise rates in order to keep inflation from spiraling out of control. Now, there's talk that he's going to raise the federal funds rate another 3 times this year. Okay. We don't know for sure, but that's the talk on the street, is that he's going to raise interest rates 3 times this year. Now, what interest rate are we talking about? We're talking about the federal funds rate. What is that? That is short-term borrowing. Literally, it is the rate at which banks lend each other money overnight. What does that affect immediately when the Fed increases the federal funds rate? Your credit cards and your equity lines of credit, right? Because that's short-term borrowing and it's variable borrowing as well. So if you already own a home or multiple homes and you're carrying credit card debt or you have an equity line of credit, you might want to just reach out to me and let's do an analysis because it's not emotional. Numbers don't lie and they're unemotional. Let's go through it and see if it makes financial sense. I call it, does it pencil, right? But let me know because sometimes putting in that credit card debt into your mortgage makes a lot more sense, going to save you a lot more money, and consolidating that equity line of credit before those rates go up may make sense. Now, once inflation has been harnessed because interest rates went up, then rates have a tendency to go back down. When that's going to happen, we don't know. Look, the tapering has just started, meaning the Fed is starting to slow down buying bonds, and they're going to start to sell what are called MBSs, mortgage-backed securities, because they have about what $9 trillion of these things that they bought to artificially lower interest rates to keep us from spiraling into a recession and or mild depression. That needed to happen. But now things are changing again because change is inevitable. So reach out to me if you have any questions or you wanted a specific customized analysis to your situation. Please reach out to me. I'm not here to sell you anything. I'm just here to give you great advice. And if it makes sense, you proceed. And if it doesn't, then at least you can sleep good knowing that you're in a good position. Have a fantastic day. And thanks again for listening and watching this video. Stay tuned to the next one. Take care.